The US dollar is higher in trading of versus the three major currency pairs: euro versus US dollar, the dollar versus yen, and sterling versus US dollar. I'll talk about it in this video, so let's get started. The new U.S. Treasury President and Trump touted the rise in tariffs expected at 2.5% on a month-by-month basis. That is increased by 2.5% each month. If companies want to move their production here in the United States, those tariffs would disappear. That's the plan, and that sent the U.S. dollar higher versus the major currency pairs. Let's start by taking a look at the euro versus U.S. dollar. Now, from a technical perspective, what did that do to the price action? Well, in trading yesterday, we saw the dollar move, or the euro versus U.S. dollar move to the upside, the dollar move lower. And that high price right here stalled right near a key swing area that we had outlined going back in time to these levels right through here, where we had swing high, swing high, swing high, then became swing low, swing low, swing low, swing low, swing low, then became swing high, swing high, swing high. You see the purpose of this area as a swing area. Either if it goes above, it's more bullish. If it goes below, it's more bearish. And the last swing was to the downside, and then we moved all the way down to our low price right here, not to return to that level until, well, yesterday, where the price moved right up to the low of that swing area. Believe me, it's this part right here between 1.0532 and 1.0543. That was a targeted level that we needed to get to and through in the morning video, and we didn't, and we started to rotate to the downside. Now, this moved to the downside in early Asian session. That's the comments from Trump and Besant that sent the dollar to the upside, and in the process, the price moved below this swing area right through here. Now, this swing area, if I just want you to blur your eyes because I want to go back in time, but you see there's a high there, the high there, high there, high there, move above, and then this low right here. So you can see how it was a ceiling right here and a floor right here, but it was also a floor right here. And if you go back in time and look at these areas right here, it was also a floor here, floor here, floor here, floor here, floor here. We broke below it, but failed, floor here. So floor for the most part here, ceiling for the most part through here, broke above the ceiling, and then moved back below the floor. You get the idea, folks. That's why this area is important. And the price did break below that level and then come back to the 61.8% retracement and the level within that swing area, and then fell back down below. And we've stayed below the swing area between 1.0448 and 1.0461 since then, also below the 100-hour moving average. So the bias remains or tilts to the downside below those levels. We didn't want to see that happen. It happened. That tilts the bias back to the downside. Resistance now against this area, and support down at the 50% retracement. That 50% is of the move down from the December high to the January low. That 50% retracement level right here on the hourly chart corresponds with the 50% for the most part off the daily chart of the move up from the 2022 low to the 2023 high. The 50% comes in at 1.04053. So 50% level on the daily, 50% on the hourly chart are nearly the same level. Get below that level, and we'll have traders looking for the 200-hour moving average on the downside at 1.0394 as the next key target for the euro versus US dollar. Last time the price traded below that level was back here around January 18th. So get below that level would even more add to the bearish bias. Let's take a look at the dollar versus yen next. And if we look at this currency pair in trading yesterday, we came up to a high price which stalled right at this swing area. The swing area is defined by a number of different swing lows through here, which form this floor. You can see it right there. Admittedly, got a little messy through here, but there were instances where the price did try to stay below that level, especially through this area right through here. We broke above it and tried to stay above it through here, but then got again messy in the last few trading days, but then found resistance against the high of that swing area. Was the last thing it did in trading yesterday before moving sharply to the downside. That move to the downside came right to the 50% retracement. That's this level right here at 153.73. That's of the move up from the December low right here to the high price that we saw in the month of January. That level, the 50% retracement comes in at 153.736, and that was enough to stall the pair and start the rotation back to the upside. We got the comments from the president and the Treasury Secretary to force the price higher. And where do we go? We came right to this time, the low of the swing area high of the swing area here, low of the swing area here. Found willing sellers broke back below the 100 and 200 hour moving averages. Both, by the way, they're both converged at 155.73. Increasing that level is important. So this is important risk defining level. This is, and the 100 and 200 hour moving averages. So be aware of that. If we stay below those levels, it keeps a bias more to the downside, and we'll have traders looking toward this swing area down here between 154.77 and 154.96. Also near there, that is a broken 38.2% retracement of the same move to the upside that from the December low to the January high. So be aware of that this area right here. That's going to be the next key support on the downside for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And what's interesting in this chart is that we're in this channel. This channel came up to the was first defined by these lows right through here, and we're down testing that low rate as we speak near the 1.2425. If we move below that level, we have the 100-hour moving average at 1.24023. On the top side, we came up to the high of that channel and found resistant sellers against it, not yesterday, but the day before. Trading yesterday, we broke above this swing area right through here, but fell short of the high channel level and rotated back to the downside. And trading at the start of the day, we found we stalled against the high of the swing area between 124.73 and 125. That was a nice sell, and then we got the comments from Trump and which sent the price below the 200 bar moving average on the 4-hour chart, also below the 50% retracement. The move down from the high in December to the low price that we saw in January. That was more bearish, and you can see how sellers leaned against both those levels right here, pushing the price further to the downside, down to our trend line right here. We have the 100-hour moving average on the downside below that level. To get below, that would increase the bearish bias and have traders looking toward this area between 1.2351 and 1.23759. What would turn the bias around is a move back above the 50%, back above the 200 bar moving average on the 4-hour chart, and then ultimately back above this 125 level on the top side, which would increase the bullish bias once again. So this is the risk area up here. So there you have it, a look at 3 of the major currency pairs. My name is Greg Bregalowski. Good fortune with your trading. Bye-bye now.